Friends, if you're looking for investment in mutual funds for at least 5 years, then mid-cap mutual fund is actually a great category because small caps has higher risk and large caps are too big to give that high returns. So mid-cap category is just at the sweet spot. Mid-cap mutual funds can act as the growth drivers for your mutual fund portfolio. But how much returns can we expect from mid-cap mutual funds? Well, as per past data, consistent SIP in mid-cap mutual funds in the last 10 years gave up to 20 to 23% XIRR returns on an average, which is great. But do remember, this is past data, which may or may not repeat. A reasonable expectation from mid-cap mutual funds should not be more than 12 to 15%. Now, currently there are 29 active mid-cap mutual funds. So the question comes, which is the best mid-cap mutual fund for the next 5 to 10 years? Well, if we just look at returns, then in last 1 year, Motilal Oswal Midcap Mutual Fund has given the highest return of 71.8%, which means last year if you had done a lump sum investment of 1 lakh rupees in this fund, then you would have made a profit of over 71,000 rupees in just 1 year. Does that mean this is the best fund? No, wait. Look at this recent research on mutual funds by Funds India. It shows that the mutual fund that ranked number 1 in 2018-2020 ranked 190 in 2021-23, which means from the best performer, it became the worst performing fund. So selecting mutual funds on the basis of last year's return is a bad idea. So today I'm going to compare all the 29 mid-cap mutual funds step by step on the basis of number 1 return consistency, in which the goal should be to find out the funds which have beaten their benchmark index maximum times in the long term. Number 2 risk analysis, in which we will analyze how the fund performs during down market. And number 3 comparison on the basis of investment style and strategy. All of this will help you decide yourself that which mid-cap mutual fund is best for your portfolio. So let's get started. Friends, please note nothing in this video is a recommendation or advice of any kind. Please use the video for learning purpose only and then do your own research. So I'm starting with how much portfolio allocation we should do in mid-cap mutual funds. Now there is no hard and fast rule, but as per my understanding, a conservative investor who can take a maximum risk of 10 to 15% fall in its investment portfolio ideally should not allocate more than 10 to 15% of portfolio in mid-caps, and such investors should ideally avoid small cap mutual funds. Next, moderate risk investor who can take a risk of 20 to maximum 30% fall in his portfolio ideally should not exceed 20 to 25% allocation in mid-cap category and 10 to 15% in small cap. And an aggressive investor who can take high risk of about 50% fall also may allocate 30 to 35% in mid-cap and 25 to 30% in small cap. For properly learning how to create a mutual fund portfolio, you can check out the video in the I button. Now let's start with analyzing the mid-cap mutual funds. So first, I will filter out funds that have AUM less than 1000 crores because it makes the fund more risky. Next, I would also filter out funds which are not even 3-year-old because in that case, we don't have enough data to analyze the funds, and personally, I would not go for funds which are not older than 3 years also. After filtering out these funds, I'm left with 22 mid-cap mutual funds. Now friends, in case of mid-cap mutual funds, our investment horizon should be at least 5 years. So let's check the returns of longer time horizons like 5 to 10 years. So we can see that there are about 18 mid-cap mutual funds that are 10 years old. But out of these 18 funds, only 7 funds have managed to beat the benchmark index returns of Nifty Midcap 150 in 10 years duration. Now this is not so good. We can clearly see that in case of midcap category, the probability of active midcap funds not beating the index is higher. So in case of midcap category, it is actually a good idea to go for Nifty Midcap 150 index fund. Index funds also have way lower expense ratio and lower risk. And if we talk about how to select a good Nifty Midcap 150 index fund or ETF, then first of all, if we are looking for SIP for long term, then we should go for index funds in spite of ETFs. Secondly, in case of index funds, we only need to check 4 parameters: high AUM, low expense ratio, low exit load, and low tracking error. Considering that Nippon India Nifty Midcap 150 index and Motilal Oswal Nifty Midcap 150 index looks okay. but since most of the people are more interested in investing in active mid-cap mutual funds for aiming higher returns than index, so for that, let's analyze these funds which have beaten the benchmark in longer time periods. These are trailing returns. Trailing returns are point-to-point returns. For checking consistency, we need to look at rolling returns. Now, before moving on, I would like to draw your attention towards the market first. See, Nifty is at all-time high and many companies are overvalued right now. Now, from the current level, market can either hit next all-time high at 26,000 or it can fall about 10 to 15%. But which one will take place first, no one can tell you that. So the ideal thing to do right now is to avoid overvalued stocks, avoid lump sum in mutual funds or stocks, and keep at least 20 to 25% of portfolio in cash positions ready to invest when there is a dip. But friends, don't just leave this money lying in your savings account earning only 1 to 2.5% interest. Instead, we can invest this money in FDs online and earn as high as 9.1% interest also. Traditionally, bank FDs provide an interest rate ranging from 6 to 7%. But banks like Surodaya Bank, Utkarsh Small Finance Bank are offering up to 9.1% interest per annum on fixed deposits. We can invest in these FDs online through Stable Money app. It's a trusted app with over 2 lakh active users. On Stable Money app, we can compare FD options from over 200 plus banks. And the best part is, we don't even need to create a bank account in these banks to invest in their FDs. Here we can start with a minimum investment of only 5,000 rupees and invest in multiple FDs with ease. The withdrawal process is also seamless. The money gets credited in your bank account within 24 to 48 hours. In fact, in case of Surodaya Bank, the withdrawal takes place instantly within 10 seconds. But are these FDs safe? Yes. See, when you invest on Stable Money, your money goes directly to the bank. So even if Stable Money ceases to exist, your FD is safe with the bank itself. Not just that, all the deposits are insured by DICGC, which is an entity of RBI. All the bank deposits, including the FDs of big banks like SBI, ICICI, HDFC, are also insured by the same insurance. And friends, not just for holding cash positions. We can earn up to 9.1% interest on our emergency fund also through this app. I also have invested some amount in FD on Stable Money. You can also download the Stable Money app from the link in the description and pinned comment and start earning. Now, 3-year rolling return of 29.28% of Edelweiss Midcap Fund means since April 2019, if we have invested in any 3-year time period in this fund, then it is most likely that this fund has on an average given 29.28% returns, which is quite good. Now again, if I compare these rolling returns with the benchmark index, then we can see that many funds has not been so consistent performer. Like in case of Kotak Emerging Equity Fund, we can say that this fund does not perform very well in short durations, but in longer time periods, its performance has been good. Whereas funds like Edelweiss Midcap Fund, Quant Midcap Fund, Motilal Oswal Midcap Fund has shown consistent return performance since the last 5 years. But Invesco India Midcap Fund, we can see, has not been able to beat the index in all the 4 time periods, so I'm going to filter this fund. So from a total of 29 midcap funds, we are now down to 6 midcap mutual funds which have shown maximum return consistency in the past in longer horizons. But again, there is always a risk that in future they may or may not perform well. So after finding the most consistent performers, the next best thing that we can try to do is look for funds which have performed the best in down market and select the best investment style that we want to add in our portfolio. And for that, let's now look at risk return ratios. For comparison, I have taken 3 and 5 year data and already marked all the best results in green. Now, HDFC Midcap Opportunities alpha of 4.43% means in the last 3 years, this fund has outperformed its benchmark by 4.43%. Some of the best alpha generators we can see are Quant, HDFC and Motilal Oswal Midcap. Beta shows volatility. The lower the value from 1, the best. So Quant Midcap, Kotak and Motilal Oswal are showing less volatility. Sharpe ratio, the higher its value from 1, the better risk-adjusted returns. So we can see the best risk-adjusted returns are of Motilal Oswal Midcap Fund. But one of the most important ratio out of all of this is downside capture ratio. Lowest downside capture ratio of 5 years is of Motilal Oswal Midcap Fund 70, which means when the market fell, this fund showed 30% less correction compared to its index. All these 6 midcap mutual funds have shown good downside protection in the last 5 years. And if we talk about upside capture ratio, then Edelweiss Quant Midcap Fund and Motilal Oswal Midcap Midcap Fund have shown great upside performance during bull market in the last 5 years. Now, one clear observation that we can make here that Kotak Emerging Equity Fund has good downside protection, but compared to the other funds here, generated lower returns in the last 3 years. Lastly, let's just quickly look at the investment style and strategy. So, Quant Midcap and Motilal Oswal Midcap Fund has zero to negligible allocation in small cap right now, which according to current market scenario is a good move, I would say. And both have very high turnover ratio, 167% of Motilal and 339% of Quant Midcap Fund, which means they keep churning their portfolio too frequently. Quant Midcap Fund follows a VLRT framework in which they end up buying and selling stocks frequently based on valuation, risk, liquidity and time. Currently it has 23 stocks and following a blend investing style, whereas Motilal Oswal follows a QGLP process in which they buy sell stocks on the basis of quality, growth, longevity and price. Currently Motilal also has high concentration because it holds only 20 stocks and it is following a growth investing style. The current problem that I can see in Motilal is that its PE is 68, which is actually too high even for a mutual fund. In case of mutual funds, 35 to 40 PE is normal. Rest, apart from Motilal and Kotak, all of the others are following a blend investing style, meaning they invest in both a combination of growth and value stocks. Note that the turnover ratio of HDFC, Kotak and Nippon India is very low, which means they mostly follow a buy and hold strategy, which shows their conviction towards their stock selection. Now finally, let's quickly talk about fund managers. So only in case of Quant and HDFC Midcap Opportunities, they still have fund managers who have been managing this fund since their inception, which is a very good thing. This gives us more confidence that the same manager is managing the fund, so maybe he can generate high alpha like he did in the past consistently. On the other hand, in case of Edelweiss and Kotak, their fund managers have changed and now the current fund managers are managing their funds from the last 2 to 2.5 years. So in these kind of funds where the fund managers has changed in the recent past, we should check their performance, and considering this point, Kotak Emerging Equity Fund has not been performing too well in the last 2-3 years. So friends, now I have shown you the comparison of return consistency, risk and strategy, and even pointed out the pros and cons about each fund. So now you can decide for yourself that which is the best mid-cap mutual fund for your portfolio. But I would like to repeat myself, we may do a lot of research and select our best fund. But we saw that in case of mid-cap mutual funds, there is a higher probability of active mid-cap mutual funds to underperform the benchmark. So personally in mid-cap category, it's not a recommendation at all. Please, I'm just telling my opinion. I would go for Nifty Midcap 150 Index. That is all for today, friends. Make sure to subscribe to the channel for more educational content. Friends, let me remind you once again, on stable money, you can invest in FDs with interest rates as high as 9.1% per annum. Currently, banks are offering their highest interest rates on FDs, so it could be a great time to invest. So you can download this stable money app. The link is in description and pinned comment.